Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. John, I hope you're going to have a great long weekend.
Well, Jim, it's shaping up to be like what you had during the summer. A lot of smoke coming down here from the fires. Activity has been stopped. We're heading into a very hot and smoky weekend down here in the Bay Area.
Now, I understand things could be getting a little warmer for Canalaska uranium. They did have a problem with both diamonds and uranium previously. They crashed and burned by the end of the year. But now, is there some good news there?
Yeah, Canalaska uranium was quite a market darling last year. Everybody was very excited that it may have scooped a cluster of kimberlite targets in the northwestern part of the Athabasca Basin where very little work has been done for uranium or anything. De Beers got excited, farmed in, drilled a bunch of the targets, and realized, these are not vertical magnetic pipes. These are pockets of magnetic sands that have showed up, and they make great anomalies, but they are no pipes. They pulled out. The other strong story Canalaska had going last year was West MacArthur. They had got it back from the Japanese, and then Cameco came in, paid them $725,000, and agreed to spend $5 million plus to earn 60% of this project. And it's, of course, next door to the Fox Lake deposit, where it has about 400,000 tons of 8% uranium. And this was on trend. There was conductors there on the West MacArthur in the Grid 5 area. Cameco went in there, drilled several holes, and disappointment, nothing really interesting. And so it was given Cameco's tax problems and the fact that uranium is still at $20 a pound, where absolutely nothing is worth turning into a mine, there was a lot of concern that Cameco would not spend any money this year. But indeed, they did come up with a budget, and they have drilled a hole, and they have managed to intersect 5.65 meters of 1.34% uranium. Now, that's not a very high-grade intersection. It is at a depth of 782 meters, but it is showing the company that this C10 conductor is fertile for uranium, and they can now start vectoring in. So they are drilling a wedge hole, a second wedge hole, to figure out more about what's going on. So this is good news. We finally have uranium mineralization in Grid 5 of the West MacArthur project, but it's all academic at the moment, which is why Canalaska has not really jumped up the way it would have last year.
Another Discovery Watch favorite last year was Uravan Minerals, which crashed and burned when drilling the Outer Ring uranium target came up worse than empty. Earlier this year, the company got back 75% of the Stewartson project from Cameco, but the stock is still sitting at a nickel. Is anything happening at Stewartson now that Uravan's in control?
The continuing weakness in the uranium market has been devastating for juniors that are exploring for uranium in the deeper parts of the Athabasca Basin. The attention in the past few years has all been on these shallower discoveries that Fission Uranium made in the Patterson Lake corridor, and then NextGen made farther north in the corridor at a deeper level, high grade, in the basement hosted. They still have substantial market caps, but interest in those stocks has also subsided. Essentially, we're waiting for the uranium price to develop an uptrend. It needs to be $40, $60 a pound to really ignite interest. What's holding it back, of course, is the Japanese still have not decided to turn their nuclear reactors back on. There's still a push to shut them down permanently. Meanwhile, uranium fuel keeps being bought on their long-term purchase contracts and piling up in the utility warehouses. And the concern is that if they do pull the plug, all that uranium will have to come back in the market. So people are pretty much resigning themselves to the idea that it may be a couple more years before uranium develops an uptrend, and the trigger will be the more Chinese reactors coming on stream that are in the pipeline being developed, and that this will end up absorbing any Japanese utility overhang. If they decide to stay in the nuclear energy generation business, well, then we could see a turnaround sooner. But in the case of Uravan, they have retreated back to the Stewartson Lake project, where they have used their radiogenic lead isotope geochemical targeting method to identify deep targets down there at 800 meters or deeper at the unconformity. Cameco had drilled several holes and not really hit the target. They now know where probably the best location is. They would like to do a deep hole, proof of concept hole that would cost them about $500,000, but they don't want to spend the $500,000 they have left in the treasury because they don't know they'll be able to replace it in case they miss. But this week we had some very sad news related to the Uravan concept. A key player behind the scenes has been Kurt Kaiser, who is a professor in the geology department at Queen's University, and he's also in charge of the facility of for isotope research. And that's a key part of this whole concept of what the decay, the daughters of uranium, certain lead isotopes. The company measures picks up clay samples and measures their content, looks at the ratios, and comes up with anomalies indicative of some uranium deposit, 1,000 meters plus at depth. Kurt Kaiser has been intimately involved with this project. He's also involved with the CMIC project, where there is a case study being done on the MacArthur deposit, and everything I've heard is this method is very diagnostic in establishing the location of a deep uranium deposit. The results of this sort of government-funded research project will come out sometime next year, and at which point the secret will be out of the bag. But this year, during his annual field trip to Bermuda, where he takes Queen's students snorkeling to look at carbonate reefs and that to study the whole formation of carbonate deposits, he had a heart attack of some sort and passed away on Tuesday, August 29th. So this is a big blow. He was only 62 years old. He's been a key scientific driving force behind this research. And this is a reason I talked to Larry Lahusen today. He would really like to tee up this $500,000 proof of concept hole for winter drilling. So the company will be going all out to try and get its market cap back up. Admittedly, even if they find a major uranium deposit at Stewartson, it'll be deep, and at $20 uranium, it'll be worth nothing. But this will be a key to positioning the company for a couple years from now, when uranium prices are back in an uptrend, and there is an appetite for finding new resources in the Athabasca Basin.
Discovery Watch with John Kaiser will be back right after the break.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario. With grab samples running as high as 32 grams per ton gold, a drill program will commence this spring to test the numerous targets located by recent groundwork. For more information, visit our website, rmroyalty.com.
Welcome back. We're chatting with John Kaiser. John, another Athabasca Basin junior you introduced to Discovery Watch last year is Fiordland Explorations, which staked all the ground surrounding Canalaska's kimberlite targets. The stock jumped from 12 cents to as high as 44 cents this week. Is their diamond play still alive, or has Fiordland got a new focus?
Well, the diamond play is deader than a doornail. Once De Beers walked and said these things are all due to magnetic sand deposits, it turned out that this staking strategy was a huge mistake. It cost Fiordland a bunch of money to stake this ground. They had to retrench. They did a 5-for-1 rollback. But an important development is that Dick Atkinson was able to bring back into the company the South Voisey's Bay project that it had optioned several years ago from Commander Resources. Now, Commander Resources used to be called Major General, and the man behind that is Bernie Kaylert, with whom Dick Atkinson has worked for decades. The South Voisey's Bay play had its heyday in 96 to about 2002. $20 million was spent south of the Voisey's Bay area, sort of in the vicinity of the Harp Lake Intrusive Complex. Donner was the leading junior. They had Falconbridge and Teck as farm-in partners. Nickel mineralization was intersected, but it was not of sufficient grade to get anybody to keep spending money. So by 2003, claims had all lapsed. Everybody had walked away. The play was open, but Bernie Kaylert went in there, gradually assembled all the information available, $20 million worth of assessment work that had been filed. They have been digitizing it into a vast compilation. The government geologists went to work and did a big study on the so-called Pants Lake intrusion and came up with the conclusion that this whole system is so depleted in nickel and copper, there must be like 15 million tons that ended up somewhere else. And this is what you want to see with these sort of magmatic and intrusive complexes, is you want to see the background metal stripped out and reconcentrated somewhere else. And so when Dick Atkinson got hold of this project, he started spending money, but this was 2015. We hadn't even hit the bottom of the bear market yet, which wasn't until the end of January 2016. He ran out of steam, invested for only 15%. But then earlier this year, he finally did a new deal which allows him to earn 100% of the project in stages by 2024 by spending $8 million, most of which is in from 2021 to 2024, and paying $200,000 and issuing 4.5 million shares, and Commander retains a 2% NSR, half of which can be bought for $5 million. So even that was a bit of a challenge. The company was trying to do a financing at 10 cents from, high net worth investors and so on. But since March, High Power Exploration, which is Robert Friedland's private company, it's an exploration company that has a technology that involves sending charges deep into the earth and seeing if there is a metallized body somewhere down there that should be drilled for. It's basically undercover exploration. Now, this type of strategy does not really apply in the setting of Labrador, where the South Voisey's Bay project is. But Robert Friedland, of course, while looking for diamonds, discovered the Voisey's Bay deposit, which is still operating now. It's going into underground mining. The ovoid itself was 30 million tons of 4% nickel, 3% copper. And this pretty much launched him there in 1994 to 97. It got bought out for almost a $4 billion equivalent valuation. Stock went from $2-3 all the way to $170. So it was a huge success. And the possibility that something similar could be here in this Pants Lake intrusion in the South Voisey's Bay area, this attracted their attention. So since March, they have been negotiating a deal, and this week they announced a deal. There are two parts. It is typical Robert Friedland holding the hammer and beating up the poor junior. The first part is they are taking down 14 million unit private placement at 10 cents for $1.4 million, and all of that will be allocated to a program that's starting now, where they're going to test the Sandy target. Now, the Sandy target, it's only about 100 to 200 meters deep. It is an EM, an intense EM conductor that looks very much like the ovoid. And so this program, if they're lucky, this is an undrilled target. that really didn't show up until geophysical surveys were done in the last 3-4 years. This itself could deliver a winner. Now, the reason I say that Robert Friedland always, deals with a hammer is the second part of the deal is that HPX can earn 65% of the project by putting up basically $7.4 million exploration and paying the $200,000 or so in option payments while Fiordland issues the shares. And if Fiordland vests for 100% in this project as a result of these contributions by HPX, they will get they will retain 35% and HPX will get 65%. So it's a bit of a bummer in the sense that the equity dilution that Fiordland is undertaking, this money, this basically makes Robert Friedland's HPX the largest shareholder of Fiordland. All of that money is going to de-risk the low-hanging fruit at the Sandy target. If it hits, then it's a no-brainer that he's going to farm in for 65%. If it doesn't hit, then we have to hope that the Sarah target, which is deeper and equivalent to the eastern deeps at Voisey's Bay, that this tempts him into the system to take on the option and start drilling for deeper, high-grade nickel-copper sulfides. So the stock popped up because in a worst-case scenario, Robert Friedland is the largest shareholder of Fiordland Exploration, and in effect it's a shell in case South Voisey's Bay proves to be a big disappointment. In the best-case scenario, they hit with the ovoid, and of course that ovoid itself would be worth a couple $2 billion today. So even with the 35% stake, Fiordland's upside would be extraordinary. And that's why the stock, when this news came out, ran as high as 44 cents, and now it's sort of settling down into the 35-cent range as people, wait to see if drilling does get underway and we get some good visuals during the program.
John, GT Gold Corp had a very big week after reporting results for its Tacoga gold silver project in northwestern BC. Was the market reaction justified?
The market reaction certainly looks justified. The focus is the Saddle target, which is a gold-silver geochemical anomaly, which has shown up largely because of a glacial retreat in the last 10-15 years. It's northwest of the Red Chris deposit. We talked about it a few weeks ago when they published the results of the reverse circulation drilling, which were shallow holes just trying to figure out where the structures are. We got good grades. And one of the clues they gave us where they published sections showing the shallow RC holes, but also the traces of the diamond core holes that they have been drilling, which are deeper, and of course this will give them knowledge about the structure, and they would show us the segments that they know are mineralized. Now this is an epithermal gold-silver system, and other metals such as bismuth, arsenic, zinc, lead, and copper are pathfinders. So when they use their XRF unit over the core and they get all these metals dinging, they can't really see the gold or silver, but they pretty much know, we have a mineralized interval. So these results, the fact that they were mineralized is not a surprise, but what the market was particularly pleased about was that some of these intervals were very high grade. We're talking 2 to 3 ounces, not huge intervals, but these are, some 3 to 10 meter intervals. And the footprint so far that they've drilled, 300 meters of strike, and going maybe down 250 meters. So far it's still a relatively small footprint of 2 to 4 million tons. However, if these grades end up hanging together, we're talking already seeing, several million high-grade ounces. Originally, they hoped this could become a sort of a bulk sample, bulk tonnage, open pit mining scenario. But the mineralization seems to be quite high-grade, structurally controlled, so more likely this would be developed as an underground mine. Now, they have got multiple holes, both deeper and along strike. They have not given us any sections of the holes along strike, so they know a lot more than they are letting us see. But one of the things that concerned me a bit is the deeper holes that they have drilled. as they get deeper into this system, they're starting to see diking, later stage diking that comes in, and of course it doesn't carry any gold mineralization. So the deeper holes that are down there at intersecting the system at 300 meters, their diagrams are not showing any very significant intervals. Plus, the deeper holes that they did report show a decline in grade. So we'll have to see more holes to see to what effect this diking, this later stage diking, is displacing the gold in the system. But for now, the focus really should be stepping along strike on the South Saddle zone, pursuing the geochemical anomaly, and they will also be setting up to drill the North Saddle target, which is its own geochemical anomaly.
We'll have the latest on Novo Resources when Discovery Watch returns.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're still chatting with John Kaiser. John, Novo Resources Corp has gone quiet as we await the day after Labor Day, when nearly 60 million shares and warrants bought between 66 and 90 cents come free trading. What do you think's going to happen?
That is a really big question right now. I have a suspicion not an awful lot will happen on Tuesday. There were about 1.6 million shares already short in mid-August. We should get another report soon to see how much more was sold short, but that's a fraction of the amount of stock that was restricted. Last week we talked about how these fund managers have a problem because they bought this 66 cents financing based on the Beaton's Creek project, which was a modest 400,000 ounce system for which a PEA was going to be produced by the end of this year to see if this thing could be developed as a small-scale cash flow. And, of course, there's the optionality angle that, if gold goes to $2,000 or $3,000, then this will definitely be in the money. So, we're going to make money on this. And then when Quentin Hennig showed up with 10,000 square kilometers of land, both applied for directly 100% and optioned from other parties, 350 kilometers to the northwest. It caught all these investors by surprise because here was a brand new story, and it also caught the public's imagination because now we're not talking about some small-scale gold development play. We're talking about an absolute potential monster discovery, the biggest gold discovery since 1886, WITS 2.0 in honor of WITS 1.0, which is the Witwatersrand Reef, 2.6 billion ounces identified, 1.6 billion of them mined, the rest probably never going to be mined because they're so deep. So the market's been pricing Novo not so much on the possibility they have 5 to 10 million ounces at Comet Well and Purdy's Reward, but that they have a piece of a 1 billion ounce discovery. And of course, we don't have evidence yet because we do not have holes down dip. We do not have anything telling us what the grade is going to be because it could be that the grade is just below the level that it is needed to mine this stuff profitably. So we have this experts declaring this thing is absurdly overvalued. You have all these fund managers in this pickle where they can't win. If they do not sell and take their 1,000% windfall profits, they could lose their jobs down the road, because it's clear all the experts are saying this is absurd, it's not real, it's way ahead of itself, you should take your profits, you can always buy it back later. On the other hand, if they do sell and this thing takes off, then they're going to be fired for not understanding the geological context. So right now, the thing in the background is who is waiting for the paper from these early stage shareholders. Now, 10 million of that is going to be owned by Eric Sprott. So I don't think he's going to sell. He has so many investments all over the map. This one has the scale of story where he's looking at possibly the biggest score of his entire career. So that 10 million shares isn't the overhang. Then there's the dozen or so other funds that have the rest. I think a bunch of them are from Europe, and they're probably going to say, we are going to keep this. So I don't think there is a huge amount of nervous Nelly paper waiting to come out. But the market wants to see. It's waiting. It's like it's a catcher with its mitt ready to catch the ball when it's thrown. In addition, you have to keep in mind that the gold producers, they're not sitting there dismissing this as a bunch of nonsense. They know Witwatersrand 1.0 is real. They have been doing their homework. Newmont is the biggest, is the second biggest shareholder. It's already in this play. It has a lead on everybody else. These big groups like Barrick and that, they have to be sitting there in the weeds, waiting for a big sell-off to step in and intercept, and then possibly approach the company and say, okay, we have this much stock, we would like to, own as much as Newmont has, and can we do a financing? And it would be certainly in the company's interest to do a deal with another major gold producer to create a counterbalance to Newmont's influence, because if a Newmont is not asleep at the switch, it's got to be thinking, how can we absorb this company as quickly and efficiently as possible? So next week's going to be very interesting in telling us whether the market, whether the big guys are all going to dismiss this as, no, this is just a flash in the pan, it's going to disappear, or whether it goes into the next gear and heads higher because this paper doesn't come out, and what does come out gets snapped up, and then everybody comes looking for more. And Quinton pretty much in his conference call last week said, we're going to be burning $1.5 million a month. The 18 million they raised for Beaton's Creek, well, a good part of that will be sucked up by Beaton's Creek work. So they definitely need to raise more money. The other question is the 90-cent warrants. That would bring in $27 million or so. So the question is, are they going to just ride these warrants, or are they going to exercise them? Because I don't think you can convert non-traded warrants into value, mark-to-market value for your fund calculations. So we may see a big cash injection, and if it's not offset by a huge amount of selling to pay for that cash injection, I think this stock will start to gain a much broader audience next week.
John, thanks for the update.
You're welcome, Jim.
We've been talking with John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Discovery Watch is a production of How Street Media Incorporated.